United States banks and lenders are primarily to blame for the United States financial crisis in 2008. The decade before the crisis saw a large increase in irresponsible mortgage lending. Loans were given to individuals with bad credit scores who would struggle to repay them. This led to an increasing amount of foreclosed homes. Meanwhile, investors bundled these mortgages into large, seemingly low risk mortgage backed securities. As home prices fell and the housing bubble burst, the mortgage lenders discovered they could no longer earn enough from the mortgage backed securities to pay back from what they had borrowed from other banks. In turn, the investment banks that had lent money to the mortgage lenders were soon facing losses in the billions of dollars. Financial institutions around the world became afraid to lend money to each other as they weren't sure they would ever see it again. As a result, a credit crunch occurred where banks drastically reduced their lending. The main bank responsible was Lehman Brothers, who had declared bankruptcy on September 15, 2008. After this default, there was a breakdown in the global financial system. Every bank felt the effects. The housing crisis was the ultimate demise of the United States economy, leading to a recession that affected the entire world. But the American people were not the ones to blame. United States banks were to blame. While some countries are beginning to recover from the recession, others are sliding deeper into economic drought, and experts are forced to find not only a solution but a prevention for this recession and future recessions that may occur.
While the financial crisis may have started in the United States, it has had global effects and has particularly hurt the African country's economy. It has been especially tough for the African citizens because they have also been affected by the food and energy crisis. With Africa being a poor continent, citizens have not been able to withstand the severity of the economic troubles. Moreover, the crisis has caused immediate effects on the African economies, which include a tightening of the credit, weakening of the currencies, and a declining of the stock market. African economies are also experiencing a decrease in global economic activity as a result of the crisis. This has significantly reduced the need for African exports, investments, and even tourism. While Africa and America are in a serious economic situation with the global crisis, these are not the only continents that have been economically struggling. In addition, Asia has also been greatly affected by the global economic crisis, with it being the second time in a decade that the region has suffered from a financial crisis. The government and citizens of Asia are better prepared for it. In an effort to attempt to prevent another crisis from occurring, the Asian government has implemented reform, improved bank account balances, and built up the foreign exchange reserves. This has allowed the citizens of Asia and its governments to have a better outlook on the long-term development. It also provides them the expansion that is necessary for the success of economic growth.
Europe also was affected by the U.S. financial crisis. Greece was one of the first countries to feel the weaker financial growth. This weaker growth led to less tax revenue, making the high budget deficits unsustainable. With Greece's debts so large, it was necessary for them to be bailed out by the European Union and the European Central Bank. The European governments decided the best course of action would be a series of bailouts for each country in crisis. The European Central Bank made a plan to purchase government bonds. The name for their program was the Long-Term Refinancing Operation. They made 489 euros or 369 billion US dollars in credit available for troubled banks. The plan was to keep their rates low, boost the banks, and stall the slowing of loan growth, which would have made the crisis even worse. They wanted to make sure that yields would not continue on a downward spiral to such a level that the larger countries like Italy and Spain would not be able to come back from.
Today, more than 5 years after the fall of the Lehman Brothers Global Bank, the main question that is being asked is, are we safer now? The answer is a resounding yes. We, as the American people, have grown from this financial crisis and have grown healthier and smarter. We've become healthier as banks and households have fixed their balance sheets. These repairs will help in preventing a future financial crisis by helping the economy withstand future financial shocks. American people have also become smarter and have came to the realization that the Federal Reserve cannot clean up financial excesses as easily as once thought. We have replaced overconfidence in the Federal Reserve with caution about financial excesses. After the financial crisis, new public policies have been put in place to prevent another disastrous recession. The main government action to prevent another recession came in the form of the Dodd-Frank Act. This act established new government agencies such as the Financial Stability Oversight Council and the Orderly Liquidation Authority. These agencies monitor the performance of companies that are, quote unquote, too big to fail to prevent a widespread economic collapse. For example, the Orderly Liquidation Fund assists in the liquidation of financial companies that have been in receivership due to financial weaknesses. This council has the power to break up large banks that may pose a risk to the financial system, such as the Lehman Brothers once did. These new organizations, formed by the Dodd-Frank Act, will carefully watch large companies and monitor banks in case something goes awry. This act, along with experience of the previous financial crisis, will help the American people to prevent a repeat of this financial crisis in 2008.